Apes and apettes, welcome back to the channel. We have a jam-packed video to get into here today, going over everything you guys need to know, and I really want to talk about this earnings continuation that we are actually likely to see with AMC stock, and history supports exactly what I am saying. So this is not a trust me bro statement. This is factual, and this statistically happens more times than not. So I do want to go over that with you guys. I think you guys will be very excited about that. As well as all of that, Jerome Powell did speak today and testified to Congress or the Senate. I'm not sure exactly which one they are. I don't like politics all too much, but he said a lot of interesting things. So I do want to go over that, and you are getting a dovish tone to what he said, and even the headlines that are coming out are very, very dovish. So this in the short term could also cause another rally. Why am I bringing you guys this information? Because you can do what you want with the information. You can make trades. You can do what you want to do. I just need to provide you guys the input and the facts here. So we're going to get into much more. I don't want to waste any more time with the intro. Hit the like button and subscribe to the channel to stay up to date with all of this information. Thank you guys for doing that. If you guys want to come trade with us and join the trading community, we are live every single day, getting in there like swimwear, doing all the due diligence that needs to be done, and we have been knocking it out of the park. So check that out, pinned down below in the top comment, as well as get yourself some free stock with Webull, Mumu, and Public down below in the description. Thank you guys for doing that, and let's get into it. So AMC had a very rocky day today, like quite literally up and down, but we did start to see a lot more of that bullish momentum around this point. Really later in the day, midway through the day, give or take, you did see that big push up with some really good volume, and then you did see this plateau, and we were kind of trying to break out above that, but slightly trending to the upside nonetheless. We were up 1.15% is where we closed, and this is a very strong day, because if you were going to see a negative reaction off of earnings, it would have happened today. But if you are going to see a positive reaction from earnings, it doesn't necessarily have to happen the day of earnings or the day after earnings, because let's take a look back at history, right? As we know, right here, earnings was on March 10th. The stock was only up 4% the next day, but we were roughly, $6, $7, $8, ran all the way up to $16. That was a double up in the roughly 2 weeks following earnings. Same thing back here. You had earnings on May 6th. The next day, we were up 5%, but 1 month later, we ran up 10x. Same thing back here. We had earnings August 9th. The next day later, we were down 6%. But what preceded that was a move from $33 to $52 per share in the following weeks after that. Now, last earnings was the only earnings we have seen since AMC really got popular, right? Since after this January rally, where we did not actually see a rally. So we were technically up 1% today. And historically, even if you're down, 6% like we were the day after August 9th earnings back here, you still tend to rally. So I'm not doubting AMC's potential to rally off of earnings, but it could take a little bit of time. We do know there was a lot for the markets to digest. Adam Aron said that he does in fact want to, and they are going to brand a credit card and give that out to people, obviously like a normal credit card is, probably partner with MasterCard or Visa, and the margins on that business are insane. For a normal credit card transaction, you might not know this, and this is why you actually get cash back on a lot of cards, but most cards take in between 2.5% to 3.5% for the transacting fee. So that's why some cards will give you 1% cash back or 2% cash back, because they're cash machines by processing all of those payments. So I would imagine, I don't know the specifics of this and I don't want to speculate too much, but if you had a successful branded credit card, which I'm sure it will be. AMC had more searches than the word stimulus check in 2022, if that puts it into any kind of perspective there, especially if they do some kind of bonuses and rewards too. It could be a huge hit, and I would imagine AMC might split that transaction revenue. Instead of a credit card getting 3%, a branded credit card, the credit card company might get 1.5%, AMC might get another 1.5%. So I have full confidence in what Adam Aaron's plan is and objectives going ahead into the future. You also did see Adam Aaron said that they want to do variable pricing. So a movie like, let's just say like Free Guy. That's the last movie that I had seen in theaters, or the first movie I had seen in theaters actually, since the pandemic had ended. That was a great movie. It wasn't a blockbuster movie. So those tickets could be relatively the same price as what they are now, but something like a Batman or a Spider-Man might be a little bit more expensive, maybe $1 or $2 more expensive per ticket, and that's going to drive massive amounts of revenue, additional revenue for AMC, and they know this works because they already do it over in Europe. So if they can transition the American markets into that, that's going to add a whole lot of revenue. As well as that, AMC did confirm to us yet again that they have been shutting down their bad stores, or their bad locations, I should say, right? They've been shutting those down. And that's something that I am very bullish on that a lot of people don't fully realize. Because imagine if a location lost $500K a year. Let's just throw that out there. They've shut down 33 locations and opened, I believe, 30 new locations that are all profit machines. So those 30 locations that were actually shut down were money losers. You're saving millions, tens of millions of dollars per year, and now their operations are more efficient than they have ever been. We know that there is a lot more talks as well about possibly doing more reward systems as well as crypto, NFTs. That has already been a big hit. Possibly AMC even wants to issue their own cryptocurrency, and it seems like, my own opinion here, they had kind of figured out that, hey, they will be able to do it, but they have to do it a certain way. That's how I felt, and that's really what I got out of the earnings call, because I'm sure they've looked into it, and if there was no chance they could do that, like they've kind of said previously, then he would have came out and said, yeah, there's no way, legislation, laws won't let us do that. So when you add all of this together, and there's smaller little things that were said in earnings, it's a lot to digest, and it's a lot to actually try to price in for a stock. And there's a lot of, like, we are going to do this, but it's going to take some time, right? So it's going to take a little bit of time for markets to actually say, hey, this is what they're going to do. This is what they are not going to be able to do. This is how much it'll grow the business or whatnot. The credit card, that's very exciting. That's going to be the second half of the year. If they come out and start talking about that more, getting more involved with these high, profit, high margin business ventures, you're going to add a whole new level of fundamental valuation to AMC stock. And I think it's clear that fundamental valuation argument can easily be made in between $15 and $20 per share, and we are sitting right at about that at $18.50. That's also another key that I do want to point out, is that we did close above $18.50. We closed at $18.53. So that is a huge sign in the right direction for me personally. Like I said earlier in today's video, I wanted to see AMC close above $17.75, but better yet, I wanted to see $18.50, and we have clawed back about a 5% drop to close positive. That's crazy, and you guys should be just as excited as I am, because that's nuts. So earnings were taken bullishly, but it's going to take some time, long story short, to figure all of that out and how to value and price AMC stock. On top of that, the most important thing that happened today was Fed Jerome Powell. And if we come just to CNBC, like basic CNBC, you can see right here, Fed Chair Powell notes highly uncertain Ukraine impact, but says rate hikes are still coming. Key points. Fed Chairman Jerome Powell said Wednesday he still sees interest rate hikes ahead, though he noted the implications for the U.S. economy are highly uncertain from the Ukraine war. Powell called the labor market extremely tight and said inflation has risen well above the Fed's 2% target. His remarks are part of a mandatory appearances this week before the House and Senate committees in Congress. He will also be talking tomorrow, but I don't think he's going to say anything too crazy like he did back at this testimony in November, when he kind of dropped the ball on us and said, hey, we're going to possibly, more than likely, have to end tapering a lot faster. Markets freaked out about that, and we did not get any of that. We actually got the opposite. We got a more dovish Jerome Powell. He said for sure that they are going to raise rates March 25th or March 16th, the next FOMC meeting. He said that's pretty much set in stone. But he said after that they don't know. They would rather play it a little safe because they're unaware of how exactly these sanctions will affect businesses as well as demand in the economy. He says, yes, there will be inflation because of this, because oil prices going up or whatnot. A lot of talk about wheat and other things that come from Russia. But nevertheless, you got a very dovish tone from Fed Jerome Powell, and the markets loved that. There's been a lot of uncertainty around, is it going to be a 0.5% rate hike, a 0.25%? Are they going to raise rates 0.5% over and over and over again? A lot of fears in the markets, and I think this testimony from Powell really sets the runway to actually see another bounce as long as this situation does not develop even more with Ukraine and Russia. Something else that I do want to point out, and this is not going to be foolproof, but historically it has been. Every time oil does go above $100 per barrel, you do see a recession. And oil currently for Brent crude is at $114.09 per barrel. And fun fact, a barrel of oil is 42 gallons. I had somebody ask me that because we were talking about barrels of oil. 42 gallons. So that's going to cost you $115 for Brent. Oil, just straight up WTI, is $111.31. Natural gas is about almost $5, $4.83. So you're seeing some big moves on these today, and that, is definitely going to change things up a little bit. The last time oil closed this high over 110 was in 2008, and oil did go to 140 per barrel of oil, and we've seen a recession after that. So we're just gonna have to wait and see. Powell, he knows all these things, and he doesn't want to go too aggressively because of that. And I know I just hit you guys with a lot of information. Feel free to go back, rewind this so you can fully understand what was said, because this is substantial. And we do have, like I said, Fed Powell again tomorrow, and that's going to also be important. But I think if he was going to drop a bombshell on us, he would have done that today. And even more so, along those lines, you do have the Fed meeting for March 16th in 1 week, 6 days, 20 hours, and 47 minutes away. And you are seeing the probabilities of a 0% rate hike at 3.1%. The probability for a 0.5% rate hike or a 0.25% rate hike at 96.9%. So you're seeing, not anybody is really expecting a 0.5% rate hike. So that is good, and that is boasting well for the markets. They've completely taken that off because nobody is even thinking about a 0.5% rate hike. So it's looking bullish for the markets in all of these regards. Now let's get into the economic data that came out today. And you did have this ADP non-farm employment change. And you can see if these three stars are all highlighted in gray, that is the highest level of volatility that is expected from these announcements. I love that investing.com switched this up. So now they actually highlight things that will cause a lot of volatility. But that was definitely a beat. Came in at 475,000. It was only expected to come in at 378,000. So that did help things actually go up today, as well as crude oil inventories did beat as well. Came in a little bit less than expected, but that is a beat for crude oil. Now, as far as tomorrow is concerned, let's go ahead and actually pull this up. We do have, actually, let's refresh the page and see if that works. So nope, I actually gotta, they changed this up a lot. So you can see we do have ISM non-manufacturing PMI. That's a top volatility data point that is going to come out, and that's going to be at 10 a.m. You also have Fed Chair Powell that testifies again, like I said, at 10 a.m. as well. You have initial jobless claims, which is another 3-star volatility event. That's expected to come in at 226,000. So if you see that go up, that could, be a bullish thing for the markets, because that would show, more people are losing their jobs, which is unfortunate, but it would be bullish for the markets in that sense. So that's pretty much it as far as volatility is concerned. You do have FOMC member Williams that speaks as well. That's going to be later on throughout the day. I believe that's 6 p.m. in military time, I do believe. So, we do have some data points coming out, a couple that are going to be volatile and can move the markets. But I think, Powell is the biggest key here, and he was dovish. He was bullish sounding, right, for the market, so that's good. As far as the Ortex data, you're looking at 20.57% short interest of free float, 105.35 million shares that are sold short. Cost borrow max doing weird things every single day, but it's at 3.14% right now. The utilization is at 100%, and the days to cover is at 2.26, so also looking very good. The positive order value was only 27% for the day, so considering we rebounded so much and actually had a gain for the day, I think is a big deal. 20 orders total, totaling $5.17 million. So nothing stands out to me that is bad or necessarily bearish here. I do think you just need some time, like I said, to digest earnings and to see that follow through. If we do see that follow through throughout the rest of this week, for Friday, we do have 22,000 calls that expire in the money. We do have 121,000 calls that are currently out of the money. If we start to break over these key levels, the first one being that $20 price, then you will see hedging that has to happen here in the next 2 trading days, and that will force the stock to make a move to the upside. So I want to be very clear about that. It's not necessarily the amount of contracts on an option chain. It's the difference between the calls that are in the money compared to out of the money. If you have very few that are in the money compared to out of the money, like we are seeing 100,000 more contracts that are out of the money, then you can see a bit of a gamma squeeze because of that sole factor. Imagine if you had 2,000 contracts that are in the money, 50,000 that are out of the money. If those contracts start to run into the money that were out of the money, that can cause a gamma squeeze. That's just for reference. It does not matter necessarily the amount of contracts on an option chain. It really matters where are you currently sitting, how much hedging could potentially have to happen, and you're looking at about 12 million shares that might have to be hedged for if they do go into the money by this Friday, and that is considering the contracts that are out of the money currently. For the put side, 6,300 puts that are in the money, out of the money puts at 76,000. So also not a huge volume expiration on the put side as well, not really on the call side either. But like I said initially, we did see that close above 1850. And we fell a little bit under that here in after hours, but it's negligible. And by the end of after hours, we might actually pop back up. So I'm taking that as a big win as of right now. As far as the 50-day moving average, that is sitting at about $18.14. We did stay above that. And the Bollinger Band is right here at about 1752. And that is also very bullish. We are over that. So we're over these key moving averages that we need to be above. And that is also a very bullish sign. For the RSI, it is smack dab in the middle. It is at 50.22, so it's not signaling oversold, overbought. You've seen a lot of back and forth action in the past couple of weeks, but we really haven't moved anywhere. MACD remains to be bullish, and that's really derived from volume, moving averages, all of that. So long story short, it looks good. Wait for that digestion throughout the rest of the week. Thank you guys for watching. Check out the links down below in the description of this video to get some free stock, as well as the link down below in the pinned comment to also join the trading community if you want to be a part of that. Thank you guys for watching, and I will see you in the next one.